So I want to talk about something. I think this is really interesting. It has to do with changes in fair value and how we can determine if either shorts are squeezing out and changing their position, or buyers are now getting rid of their position and they think it's going to go lower. Right? It's pretty simple actually. And let's take a look at this. This is how to determine changes in fair value. Right? Essentially, what we want to see is usually what you'll have a range, right? Buyers and sellers are coming in, and we have a range here. We can tell, right? We can tell that buyers are here, and we've got sellers there, right? So, what would it mean if fair value changed, right? If fair value changed to the upside, and essentially these prices were now too cheap, we would have a leg, right? That's actually the term for it, a leg, or some people call it a fair value gap. I know ICT calls it a fair value gap, but it essentially is that's the right name for it. It's a change in fair value. Fair value has changed and prices immediately move. Now, why would fair value change? We don't know, but we know that there is a supply and demand imbalance, right? There no longer is sufficient supply available, and there's much more buyers willing than sellers immediately. So the prices rocket, right? So essentially, these shorts here, right? The shorts that were here actually covered, right? If we look at this again, and we know that we have sellers here, we have buyers here, right? If fair value changed, but it only changed up to here, right? Sellers are still interested. See that? Fair value's changing. Sellers are still interested. Okay. Same thing with buyers. Fair value changes. Buyers are still interested. Fair value change. Buyers are still interested. You see this? See how these small changes? It's not like before how we got the range and then we got an explosive move in fair value, and then we're getting a retest of the range, then explosive move in fair value again, right? You can see here that this zone here is actually the imbalance, right? We know this with technical analysis. We have a supply and demand imbalance. This is actually where the fair value has changed, right? In this rectangle here. So by realizing this, we can determine if there is accumulation or if there is distribution. Because if we're seeing a range, right? If we're seeing some kind of range happening, and we see here that fair value did change back to the downside. Because remember, fair value is always changing, okay? Because markets are a thing, life is a thing, there's events always happening, there's psychology is happening. Fair value is always changing. That's why price moves, right? So essentially, the reason before that is volume is the defining factor of price movement, right? Volume precedes price. Now, there is instances where price can actually create volume. There are instances like that. If fair value has not changed, right? And which it does happen sometimes, right? Sometimes fair value only changes such a little bit, or it's like think about like you're buying an old video game, right? The video game is essentially cheaper as prices go down, but the value of the game, I mean, the game's still the same game probably, right? So as prices go down on the game, it's actually cheaper and more people are willing to buy it because it's cheaper, right? And it's only cheaper because the game is still the same game, right? And maybe there are other games coming out and et cetera, which actually changes the value of this game because there's much better games to play. But in relation, right, this is an example how price could create volume, right? You have to think like if the cost of if the sandwich is still the same sandwich at the store, right, and there's no other competitors that are changing the value, right? Because if another competitor makes a sandwich stand right next to his stand and says, hey, I have another sandwich for sale, lower price, the value of our sandwich is going to decrease, right? So that's a way that price could create volume. In the case that fair value is not necessarily changing significantly, we could lower the price, create volume. We could raise the price and sellers are entering the market. That's fine. But that's still not as reliable as volume creating price, right? Because no matter what, if the volume is there, the price is going to move, right? So although people might want to focus on price creating volume, it's actually even more reliable to focus on volume creating price. So that's why technical analysis and stuff like that, it is to a degree necessary, but if you want to look at everything, right, volume is where you really need to be standing on. You need to build your foundation on volume, because in that sense, you're going to be able to see everything clearly. It's not just going to be, I don't know if there's going to be volume at this price, but we do know that when volume comes in, price is going to react, right? So this is essentially a condition where fair value, we're looking back at the screen now, fair value actually didn't change much, and buyers said this is too cheap, right? So same thing, we could even come a little bit lower, and buyers essentially said this is too cheap, right? So I want to kind of give two scenarios, right, to kind of shift the brain. This is a scenario, right? And this is a scenario. Okay, you can see here how we're still going higher in both figures, right? Both figures were going higher. Okay, but essentially in one figure, I just want you to think of which one it is. In one figure, when price goes higher, essentially nobody's changing their thesis, right? Essentially, shorts might be adding more, or shorts are absorbing the selling, or buyers are running out of fuel. They're not able to push it much higher. And that's going to be this scenario here. Okay, it's essentially going to be a distribution. You can see every time we go higher than this previous peak here, essentially what happens is it can't get much higher. The shorts that were here are actually adding more, right? And then they're adding more and adding more and adding more, and that's gonna give them it's the indication that or this is going to give people at least the visualization that it's more expensive. Sorry, not cheaper. It's more expensive. So, like I said, we've got two scenarios here, right? And you can kind of see that's why trend lines do work sometimes. Like you have a trend here, and we see we can see the distribution here, right? As we're going higher, we're not actually squeezing out shorts, because remember, the whole reason why shorts are getting squeezed out, you have to think about it, right? Why would I want to get stopped out of my position if the trade is no longer going to work? Right? I don't want to get stopped out of my position and immediately go in my favor, right? Then I think, I should have had a better stop loss, right? So essentially what you want to be thinking of whenever you see changes like this, right? Whenever you see imbalances be created like this, right? Somebody got out of their position and they're not expecting it to go back in the direction that it came from. That's all that it means, right? When they get squeezed out, or when buyers are, let's say we have another situation here, same thing, and buyers, when buyers are tired of maybe holding this up, or we run out of buying power, we're going to dump quickly, right? And essentially when we dump quickly, that means that the buyers are not expecting the price to come back. They're not holding it up. They're not willing to say this is too cheap for now. They're saying, no, you know what? Fair value is lower. That's exactly is what is going on here. And that, like I said, is a different scenario than if we just put in lows like this, right? If we just put in some lows like this, that's a much different scenario, right? This essentially tells me is my first indication that this is getting cheaper, right? Especially if we see interest rising as we're coming down like this. Oh, that's a trade. That's a trade, I'll tell you what, because majority of the time what will happen is a stock is coming down. We'll make another thingy here. Stock is coming down, right? And what will happen is it takes volume to turn this thing around. It's essentially getting cheaper. And as it's coming around, then we start to see the turnaround of this stock. And I'll just give some slight knowledge. How do we know it's going to continue up, right? Well, we want to see volume follow through. Essentially, volume is going to follow through the higher it goes. And essentially, that's going to give the indication that those shorts, right? If we had shorts that were here, right? All those shorts are squeezing out. Because remember how we talked about when fair value changes like this, right? Remember these imbalances here. When fair value changes like this, right? That's because they're getting out. They're not expecting it to go back lower. So essentially, that's double the volume, especially if we have buying and selling. There should be some good volume here that's following it up, right? So we'll have essentially volume pushing this thing and reversing it back to upside. That is a fantastic trade, guys. Fantastic trade setup. And that's actually the opposite, right? That's the opposite as if we see just this. We see volume coming in, and then look, it dies down, right? It'll die down as we come up. That essentially tells me that's just a pullback, right? And shorts are getting ready to maybe hit this again, or et cetera, et cetera. Maybe we saw some capitulation here, and they bought some shares back. They're selling, or they're buying back some of their shorts, or buyers are now interested, right? But they're not interested enough at these prices. We still need to go lower, right? So that is essentially the kind of image I'm trying to paint here, right? The difference in these price movements, right? Because people might think, oh, just because we're going higher, or just because we're going lower, it essentially you have to see what is going on. And that's why volume is such a good tool, because volume really shows you what's going on. And sometimes you don't even need to see really the action that's happening, right? You can just tell by looking at the volume, say, wow, we've got increasing volume right now. There is definitely a change right now. Let's now look at the price action and see what kind of change this was. And essentially, if it was a change where you're coming down and then now you're seeing volume to the upside like this, just like how we were saying, fantastic. I love that. That's a trade I'm going to take every single time. You know what I'm saying? So, just to recap, guys, okay? That's how we can tell, right? That's how we can tell. Are shorts getting squeezed out? Or are we still in the trend, right? I heard from a trader of that I've met over this past year. Shout out Mando. He likes to wait for the imbalance to downside. So essentially, if you're getting imbalances to the upside like this, you don't want to short this yet, right? What you want to see is you want to see the imbalance get created to the downside. Essentially, these buyers, and this isn't in his exact words. His exact words, you wait for the imbalance to the downside, right? And essentially, in my words, these buyers here, right? These buyers are getting out now. They're afraid it's not gonna hang out anywhere in this area here. It's actually gonna go lower, possibly take liquidity from here, possibly, right? And then if we see the imbalance here, they do not believe that we're even gonna hold here, possibly go they don't believe it's gonna hold here, possibly go to the next one here, or the next leg lower. Essentially, it's that easy, guys. You got to be able to visualize, right, what's going on. If we're seeing changes in fair value like this, what's the reasoning behind that? Essentially, these shorts here are getting squeezed out. They're out of their position. They're donezo, right? Because think about it. If I was shorting here, right, I know I'm probably repeating the same thing, but if I was shorting here, right, and prices got this high, right, if prices got up here when I was shorting here, why would I not want to add more? It doesn't make sense, right? So this is essentially another setup, right? You see coming up and a nice fake out, ICT calls it Judas swing, or I don't essentially know what he calls it, but he calls something, but essentially it's a fake out before the breakout. Come up and either volume's not confirming, right? It's a low volume. We're getting some absorption here, but then all of a sudden volume drops off to the upside. Boom, come back down, and we pick up volume. But essentially, that's what happens. If we have shorts here, fair value kind of changes, right? Or buyers are too strong here, right? Buyers are too strong here. They push it back up, and shorts say, "Wow, we're this high now. Let's hammer it even harder. This is for sure cheaper." They hammer it down. We break that support, and now we're creating imbalances to the downside, right? That's essentially what you want to be thinking about when you're looking at price action, stuff like that. And like I said, guys, use volume as the tool. Use volume as the tool, because if you're getting, like I said, if you're getting legs like this, right, and then all of a sudden you're not getting volume, right, that's a concern, right? But essentially, the way that this this price action is on the screen, that would more or less indicate there is some volume that's there, right? So that is the video. Okay, thanks for watching. I hope you learned something, guys. This is how to identify changes in fair value, why you need to be paying attention to volume, how you can incorporate volume and price action to determine if this is a validating move, if this is just as a pullback, right? What kind of move is this? Are shorts for sure covering here? Let's look at the volume, right? So let's not forget, okay? Let's not forget, right? This stuff really is important, okay? If you're able to read price action like this, and make sure that the volume is validating it, guys, what more do you need? You know what I'm saying? So anyways, cheers. Discord is in the description. It's free. We're just a community of traders, no call outs. We don't necessarily do we don't give financial advice. None of us are financial advisors, but are financial advisors. But I have a community in the Discord. If you want to just join and meet some other traders, maybe share your trading ideas, hop in. It is free, and we will see you guys on the next video. All right, see you later.